Welcome to Local Leverage, your competitive edge in business. Today's guest went from a full-time corporate America job to complete financial freedom, not with flashy flips or overnight success, but through steady, smart real estate investing. He's built a portfolio that changed his life and created a movement that's helped thousands. And he shows up every single day to share real-world advice for investors ready to take action and put in the work. Today, we're diving into his playbook for building wealth through real estate investing without the uncertainty. This isn't get-rich-quick scheme. It's a get-rich-for-sure formula. Please welcome real estate investment strategist and founder of One Rental at a Time, Michael Zuber. Thank you for being on the show.
I appreciate the opportunity. It's always fun to talk to somebody who's been in the game a while. Not only reminisce where we've been, but we can also help a lot of people. So look forward to the chat.
Awesome. Yeah. I mean, I'd love to start maybe there and kind of go back to your beginnings on this. As I understand it, you were in kind of corporate world and W-2 employee. So how did you come to the point of saying, I'm done with this, this isn't for me? And how did you get started in real estate investing?
Yeah, so I wish I had a better story. I actually now kind of wear it as a badge of honor, but I got to tell you in the moment, it really didn't feel good. So, I'm Gen X. I'm a millennial, I'm sorry, millennial. Where'd that come from? I'm Gen X, and I started investing in the stock market first.
Okay.
And if you can kind of run the clock back, I was, investing in the stock market during the .com era, and I successfully turned $7,000 into almost $200,000 over about an 18-month period or so, as I recall. And then I lost most of it. I lost 80%. And
this is all like early 2000, I'm assuming?
Yep, exactly,
Yep, okay.
early 2000. And specifically Enron and WorldCom both crushed me, right? Both of those turned out to be frauds. People went to jail. But that didn't matter. My money was lost. And I was very depressed. I had gone from the highest highs to the lowest lows. And I realized that I was frankly gambling. I called myself an investor, but I wasn't. I was gambling. And I was not going to do that again. I, at the time, said the stock market is rigged. It's a casino, and I don't know the rules, so I refused to play. And I was walking through Borders bookstore, in 2000 or 99 probably, and stumbled across that purple book that, helped a lot of us change our mindset. What's really comical about this is my background. So I have a college degree in economics. I have an MBA. I was a corporate accountant for several years. And this freaking badly written purple book in its first edition, which was badly written, changed my life because it showed me a different way. So Rich Dad Poor Dad, if people don't get what the purple book is, opened the door that allowed me to understand there's a different way. That book is not a how-to book, right? It's a mindset book. It's a vision book. But that set me on a new journey, and I consumed hundreds of books, and I decided that I was going to become a real estate investor. And my grand vision in the beginning was simply 4 properties. That's as big as my mind would allow me to think about. We just get to 4 properties. We continue to contribute to the 401k. We continue to climb the corporate ladder, and my retirement will be better than most. So at 30 years old, the journey goes from, stock investor to real estate investor who only wants 4 properties. That was the big grand vision in 2000, 2001. And, the rest is history from there.
When you got kicked in the teeth with the .com crash.
Blow up.
I recall that well. I was definitely a part of that too. How were you feeling at that point? And what was going through? I mean, you lost a bunch of money. It had to feel like, now there's this other angle. How am I going to go put my trust into yet another angle to get, to raise money and get rich?
I had to figure out a different way because, again, I don't know about a lot of people, but I had a very rough childhood financially. Right. If money was around, life was good. If money wasn't around, Dad was pissed off, and Dad was pissed off a lot. So money was a stressor. So I'd always wanted my family and daughter to not suffer that. So as somebody who turned $7,000 into almost 200, that's more money than anybody in my family had ever seen. I had that at 29 or 30 years old. And then to lose 80% of it, I I don't think I could have felt more depressed, more like a loser, more like an idiot. And then I stumbled on this book. I reread it probably a dozen times back to back. And I'm like, I had no idea there's this other thing. It's mind-boggling for me to admit that 35 years later, that silly book unlocked a whole new world for me. But it did. I can't stop not giving it credit for opening my eyes or my aperture, to what was possible.
Did you approach that with some skepticism though?
Oh, of course. Yeah, I was like, it took me a year. All right. The other thing that is not often talked about is what did all the books tell me to do? You know what they told me to do? They said buy in your backyard. I live in the Silicon Valley. And cash flow is not something that the Silicon Valley has ever had, near as I can tell. It certainly didn't have it in 2000, doesn't have it today. So I wasted a year of my life. Every Sunday. Sunday was get in car, drive around. I couldn't find cash flow. But what I did learn is I learned a skill. I learned how to identify what an average deal was. Unfortunately, in the Bay Area, an average deal was like negative 8%. So it was an alligator. It ate cash every month. And I didn't want one of those. I wanted something that would feed me, not, consume cash. So after a year, as I give credit in my book to my wife, far smarter than me, she says, that's enough. I'm not doing this anymore. 52 weeks is enough. So she said, either we stop this or we go to a different market. And again, that was so uncomfortable to me, going to another market, because I'd only lived in the Silicon Valley. I grew up in Sunnyvale, lived in Cupertino, lived in Mountain View. That was it. And we found a market, Fresno, California. It was two and a half hours one way, so 5-hour round trip. And we'd never lived there, never even been there. But we started going down there, 3 times a month, usually on Sundays. And we started to find and learn the market. And ultimately, we, after asking a lot of people, where should we buy? Because again, Fresno even then was 500,000 people. It was a big city. Now it's 1 million people. So after, talking to 30, 40 people, they talked about the Mayfair district, which is 93703. And then we started looking at houses because that's all I ever knew. And, after, God, I don't remember, 4 months, 5 months, we found this property on Norris Drive. That was the best yield we'd ever seen. It was like a 9 or a 10% yield. So cash on cash, simply said. And we wrote an offer and it was accepted. And, this whole time I'm nervous, I'm apprehensive, but, I'm moving forward because that's what the numbers say. And as Murphy's Law would have it, we move a tenant in at, market rent. We bought it for $107. It's not a secret. You can look it up on Zillow. We rent it for $10.95. You call it $1,100, and we're ecstatic. We're gonna make $250 a month or whatever it was, but we're like, we got one. We only need 3 more. But as life would happen, that family that moved in separates during the first month of they're in my property. The wife takes off with the kid, and the husband's not happy. He decides to become a professional alcoholic, never goes to work, never pays rent, and we have an eviction with our very first tenant.
Oh, jeez.
It gets worse when we finally get into the property, because, again, we're in California, so it takes 90 days to get people out. He has damaged my brand-new house to the tune of $15,000.
Oh, no.
So this gets really interesting, because you got to remember, I lost a lot of money in the stock market. Depressed. I'm in this new asset, but not sure. After going into the property, looking at wine bottles shoved into my sheetrock like it's a wine rack, right? This is how destructive the guy was. I wish I had pictures. Didn't have smartphones then. I wish I had pictures. I go to the car, ready to give up again, ready to quit.
I bet. Yeah.
Right? This city sucks. It's gang infested, right? I was already telling me all these things why I should leave. And again, Olivia, my better half, says, did we do anything wrong? I'm like, no. Credit check, reference check, blah, 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 blah. Unfortunately, on an application, there's no box for saying, are you going to get divorced? Right? There's that box doesn't exist.
Yeah.
And we got. So she said, let's fix it up. and try it one more time. And I was shocked because I was already, if she would have just paused, we would have sold it at a loss and been gone.
Done. Michael, just real quick, I mean, leading up to this, I mean, in your first deal, where were you getting the framework and the knowledge to approach this? I mean, was this all just you reading books?
And trial by again, one of the good things about that first year of time wasted is we saw lots of properties and I did lots of calculations. Right, I had the spreadsheet. I'm an accountant.
Good thing you had that accounting background.
Right,
yeah.
So I could do the numbers, and everything was negative. But I learned the discipline of putting the numbers together to get to that negative or positive number. So I learned what average was, and that's what I did for the first 90 days in Fresno, specifically Mayfair's. What's an average deal? And what I found was an average deal was about a 7, so it was cash flow positive. I never want to do average. I don't believe average winners, do that. So I ended up finding a deal that was a 9%, and that was Norris Drive, and that's why we said yes, and we pulled the trigger. But it was discipline. I looked at my market, that little market for 3 years, right? I didn't get distracted. Right? I had a job, a family. I couldn't learn Fresno. I'd never lived there. I didn't know Fresno, but I could learn this little part really well, and that's what I did.
Interesting. Okay, so your wife says, "Hey, let's go ahead and double down. We're going to fix this thing back up." Keep going with this story.
So we moved in the second tenant, and as life would happen, tenant was perfect. Never missed a payment. Never did anything. In fact, we bought in 2001. By 2004, we did a cash out refi. We pulled out $40,000. We bought 2 more properties. That initial seed, that initial seed turned into what today is probably 30 units of our portfolio, cash out refi, 1031 exchange, equity extraction. So it does work, right? I tell people all the time the first 5 years suck. It's where all the mistakes and lessons are learned. But if you can be in the game, if you can cash flow day one, you don't set yourself up with bad debt structure. That's where a lot of people blow up is bad debt. Wealth comes at the 10-year mark, and I'm living proof of that.
Thank goodness you had the intestinal fortitude and the partner that was willing to say, no, let's keep going. I mean, I think
no doubt.
So many investors start off and the experiences
I was ready to
expected.
I was ready to quit. Yeah.
Yeah. It seems like most investors I speak with have that sort of a situation or that sort of experience, out of the gate. And
I really do believe that real estate investing is the best path for most people to build true wealth. But I also believe that real estate will test you because the riches are so good. It only wants to reward the people that will get through the suck. That's why I'm very clear with people. The first 5 years are going to suck. You're not seeing the momentum. The cash flow is a trickle. It doesn't move the needle. You make mistakes. You learn your lessons. But if you can
so to that end, I mean, is it a young person's game then? I mean, it's somebody at my age that is wanting to start in real estate investing, is it too late or?
No, it's not too late. I have plenty of people that are in their 50s and 60s that started. Typically speaking, if you're 60 years old or so, you're not going to come in with a low down payment. I would strongly suggest putting more down because again, your time horizon's different. Right? Again, I believe wealth comes at the 10-year mark, and if you're starting this at 62 years old and you're hoping to get rich by putting a 5% down, probably not going to happen. But plenty of people should start. 40 is not too old. 50 is not too old. The other thing I tell people is who should do this, and I have one answer. If you've gotten if you don't think you're going to live 5 years or longer, don't bother. Go do something else. Go enjoy the last 5 years however you want, because you have to have a time horizon. I do not believe in get rich quick. I do not purport that. Again, I've been very clear. First 5 years sucks. 10 years to get wealthy. So if you have a time horizon that's 5 years or less, real estate's not your game, and that's okay. Go enjoy those last 5 years. Do something else, and that's okay.
Yeah, I agree. Well, so let's just talk about the moment we're in 2025. I mean, there's all sorts of uncertainty at the least, and some headwinds, but there's also opportunities. What are you seeing in the market, and are you bullish about 2025? And what are you recommending to the folks that you're helping?
So I always answer this question one of two ways because, again, there's a lot of people that are hurting today. And I think it's important to acknowledge that, especially if you're in the real estate game. You're sitting at record low transactions, right? It's not a lot of fun. Lots of people have left the business. Unfortunately, I don't have good news for you. I think 2025 is going to post the cycle low for transactions. And again, I have a 55-year spreadsheet. I've gone back and studied housing, real estate, stocks, the 10-year unemployment, all these economic things, because that's my background, to 1970. So I believe that 2025 will be 1981-82. It's going to be the cycle low of rising rates, which we have been through before. The good news is, if you stick around, 26 will be better than 25, 27 or 26. So we will see increasingly better transactions. So what I tell real estate agents and brokerage and mortgage brokers is, sorry, one more hard year. Great news. You're 1/3 done with 2025, right? Well, this is at the end of April. We're recording this. So congrats. You only got 2/3 to go. But let's go to the bigger picture. My audience, the people that likely watch this, you're real estate investors. And I have good or great news for you. 2025 will be called the year of the investor. Why do I say that? Well, investors are not emotionally charged. We don't buy something because of school district or because we like this or we like that. We're not emotionally attached. We are numbers oriented. And at the end of the day, investors key on supply and demand. And 2025 is your world's your oyster. Less demand. I mean, does an investor want more or less demand? Well, of course they want less.
Yeah.
Number two, do they want more or less supply? We want more supply. Congratulations, supply is going up every week. Lastly, real estate investors make their money when they buy. They might recognize the money when they sell, but they make the money when they buy. And the best deals I have done are with motivated sellers. And if you have less demand and more supply, it gets easier and easier to find motivated sellers. Now, let me be very clear with most of people watching this. Most of us, myself included, want to do one deal a year. I am telling all of my audience, this is the year that you should do the deal of the decade. I want you to be hunting so hard. I want you to be doing so much follow-up that you are able to do the deal of the decade. And to be clear, I don't believe these come around once a decade. I believe they come around once a year. So you should always be looking for the deal of the decade, but especially in 2025, you have to be looking for it. And the best thing about today's world in this conversation is we have tools that allow you to expedite that. I believe, for example, NODs are coming back, right? This is something that, Sean O'Toole started property or foreclosure radar with. It's coming around again, right? This is all cycles. So the ability to have a system that could do targeted lists, lead stacking, send mailers automatically, which I think my audience will do, it's just going to allow you more at-bats, more conversations. Yep. And I believe if you do the work and are disciplined, you will be able to get the deal of the decade. And that should be awesome. You should be excited about that.
When you're helping your students to develop their own thesis for investing and creating their own buy box, how do they individualize that deal of the decade? What does that look like, and how do you coach somebody through the process of identifying that?
So we'll step you through it. So the first thing is you have to understand that I believe real estate investing is a skill. You are not born with it. It is just like a language, an instrument, or a second language. You have to practice it daily. So as long as you understand that, and you understand that you can get better at. The first thing, step one, is to get a set of criteria, aka a buy box, and understand what average is. And by average, I mean yield, cash on cash return. Is it positive or negative? Is it 5%? Is it negative 2%? Whatever. And it's going to take you a minimum of 3 months, and it could take you 6 months to get that. But this is vital for the deal of the decade. Until you learn average, you don't get to go past go. That's rule number one. You should be able to tell everyone the average deal in my buy box is X. Let's call X 5%. Okay, great. So if average is 5, a good deal is 6.5 or 7. A great deal is 9. And a deal of the decade is 11, 12, 13. Right? So you want to do something that is astronomically better than average. But again, I want to be clear. Deal of the decades just don't fall from the earth, fall from the sky. Until you can articulate average, you don't know what good, great, bad, whatever, let alone deal of the decade is. So it's a process. It takes focus and daily discipline.
What's that process for them to identify that? I mean, that's very specific to their buy box, to their location. But but what's the process for doing the research and understanding average?
Yeah, so I strongly suggest, again, people that are learning the skill get what I call a buy box. So let me just tell you my buy box from 2001. 93703, so a specific section of the market. Single family homes, so not anything else. 3 or 4 bedrooms, so not small, not huge. 2-car garage, between 1,200 and 2,000 square feet. Now, why? Why so focused? Well, here's the deal, folks. I'm a full-time employee who travels on airplanes around the world, has a growing family, and likes to, try to stay healthy. I don't have a lot of time. So that criteria allowed me to get a active list. Because you got to remember, I'm doing this before we have tools. I'm doing this out of, some online, Realtor.com, Redfin, whatever, Zillow. And it has to produce an active list of greater than 20 and less than 40. Why? Because I need to get through it in a half hour or less. Ideally 20 minutes or less. And by looking at that every day, honestly, twice a day, I start to see trends. What's selling? What's not selling? What's getting a price drop? What part of this is working or not working? And if you take those listings and put it in a spreadsheet, it's going to start to speak to you. And when that list gets to 100, 150, because again, you're going to keep them on there even after they sold, you're going to go, when I sort all of these, the best deal is X. Why was X the best deal? Why was Y the worst deal? And then you could say average is Z. Yep. Once you have that picture, go hunting. But it's really that's where most investors get wrong. They just scream, I want a deal. I want a deal. You don't know what a deal is. You don't even know what an average deal is. Why are you wasting time? Why are you gambling? Don't gamble.
I like that. Yeah. Making much more numbers based and tangible. So how much of that process was not just looking at your own deals, but also looking at other investors in your area and tracking their deals and seeing like, hey, I know this one bought here and they probably invested X.
I did none of that. I did it all wrong. Again, this starts in 2000. I lived in a very siloed world where I only saw my spreadsheet. One of my weaknesses and errors is I didn't network. I didn't grow. I didn't meet other people, which meant I grew slower. It meant I had to suffer all the losses, right? I learned every painful lesson myself versus if I had a network of other investors, they could have saved me. I could have gone faster. It's definitely something I push now is like one of your jobs is to network. It's one of my 7 rules. You got to meet 2 new people a week because network is everything. So that is a big deal, but clearly was a gap in my process the first 5 years.
And at one rental at a time, is your thesis still buy and hold for rental? Do you have a mixture of folks that you're working with?
So I work, again, I'm definitely the buy and hold guy, but the network has grown. We have people doing room by rent, midterms, doing infill development. My world, thankfully, attracts good people that are trying to make a difference in the real estate world. So I have everyone, and some people doing syndications and, big multifamily deals. So we talk about everything. I always stay very much in my lane. And then if somebody wants to go somewhere else, I bring them in to talk about it. Yeah. Thankfully, I've been talking on YouTube now for 7 years and have a decent reputation. So I'm able to get, access to lots of people.
Yeah. Yeah. So walk me through next step. So let's say somebody understands average. They've built their buy box, understand their space, and they're starting to do that research. What tactics do you recommend for investors that are, you're working with at that stage? How do they go about finding these leads and engaging?
Yeah. So again, the process in the beginning for me was just unfortunately only active listings, right? Yeah. That's all I had for 15 years. Now, because of tools out there, you should be able to take your refinement and also bring that to off market. And, as somebody who's done off market deals since 2020, that's where the best deals come from. So if you can find a way to market, send mailers to target rich environment that you care about and you would be shocked. I've done a couple of mailers. I've only done 2 mailers ever. And, that led to a deal of the decade. I was able to buy a condo in a community that I knew was going to turn around for $23,000. It's now worth almost 200 because the community turned around. I had some inside information. I knew it was going to be turned around. So I marketed because it was at the bottom and distressed and had lots of don't wanters. And I was able to get several callbacks, and I negotiated a deal of the decade. And I would do a lot more of that if I was still in the build stage. But, sometimes when you win the race, you don't play as hard. So that's where I am now.
Yeah, that's right. Success breeds complacency.
Sometimes, yeah.
Sometimes. So talk to me real specifically about, an approach for a mailer. I mean, I know you're a fan of niching down and getting really specific. How are you approaching these folks? Is it about your ability to, buy with cash and things like that, or are you trying to tap into the issue that they're dealing with?
I would definitely, I think there was a time, maybe 2020 to 2023, where cash won. I don't think we're in that space now. What I would coach somebody in the ORAC community to do, now this is probably not a professional who's got a team and, auto dialers and all of that, is I would just reach out saying, and I would be straight up, my name is Michael Zuber. My buy box is X, and I would list that out. I saw that your property hit my criteria. If you're interested in having a conversation about a transaction, here's my number or my email, whatever you're comfortable putting down with there. I believe, again, I get these postcards and letters all the time, but I believe in just being as upfront as possible. And again, I think your chances of getting somebody calling you saying, hey, I'm an investor, this is my buy box, your house is in my buy box, or your duplex or your quad, I think you'd be shocked because you're going to stand out compared to all the, I'm a cash buyer, I could buy now regardless of condition.
I agree.
So that's what I would be doing.
Yeah, it's my belief as well. I mean, I think to the degree that you can understand the situation that a given person is in, allows you to approach with more empathy and not just be kind of what I call that kind of sales breath of like, oh, I buy with cash and you don't have to clean it up and all that. Like, that's the ante to the game, right?
Yeah. The other thing I would tell someone to do is realize if you're going to do this, don't just do one, right? Set up a drip or whatever you guys call that in the industry. And, I would do one, I don't know if it's every 2 weeks or once a month, whatever you're comfortable and your budget allows. But I've learned from the pros that it's never the first mailer, it's the third or the seventh. So if you're going to sign up for this, my folks get very tight buy boxes. So it should be, 50 a month, 100 a month are going out, which is a cost that most people can bear. And this should be consistent. So, go for it. The deal of the decade's out there. It's 2025 will go down as the year of the investor, I'm convinced. Less demand, more supply. I don't know how investors don't win in this market.
Yeah. In addition to direct mail, do you recommend other channels? I mean, I've seen a lot of very successful investors that are just single channel. Hey, I just send out postcards to this list and I keep hammering them. I'm a proponent of multi-channel and layering things. Like if I'm going to do a mailer, then I'm going to follow it with a phone call or I'm going to couple it with an email. What's your thought about multi-channel? And is this going to be a business for you? Then absolutely. Multi-channel is absolutely better. A lot of the followers of mine are like, Michael, I can give you 20 minutes a day. Wow. Right? And the most that I can put on autopilot, the better. And a lot of them probably aren't technology oriented. So my advice to most of these folks is just get a drip campaign with mailers. It's the most automated. You set up the template once, you agree to do it 3 times to that person, whatever it is. The more automated it can be and the easier for my, who I was, 20 years ago, the better. I think adding more complexity to me wouldn't be helpful. Like if I had to look at my phone all the time and do all of this. But you know what? If you're going to go to this full time, by all means, multiple avenues, the better. Yeah. Nice. So in your group, I mean, obviously that starts with lead generation. You got to get some leads, you got to get some things to engage with. What else are you helping them to navigate as they're stepping into this business?
Yeah, the last thing probably would be deal construction. And again, the deal of the decade will likely come with some seller financing. And what I'm trying to get people to understand right now, and we actually have a conversation this Sunday with a lender who can help with this, is you can write up a cash price, right, which probably would be the lowest number. But you can also write up an offer that says, hey, I can give you a higher price if you are willing to carry some of this, 10%, 20, 40%, in a second position loan. So I have a lender, and we're going to talk in my community this Sunday about how you can buy a property with 10% down, a 50% first, and a 40% second, and get a lower blended interest rate, right? Give the seller their price, you get your terms. So I'm really getting people to understand you've got to be comfortable writing two offers. One all cash, quick close, low. But you know what? Let's get interesting. And why is this important? Maybe you can also look for high equity. Right? Look for high. This is something I couldn't do 20 years ago, right? NOD, high equity, active. Because if you have that, you should be flexible. So the big thing I'm telling people to understand in 2025 is this is not 21 and 22 where cash wins. This is let's get creative. Let's be different than everybody else. Everybody's going to beating them up with this stupid low cash price. Be the guy that has a cash price, but also has this other one that's 20, 40, 50K more, but you both win. If you could set up the deal where they get a higher number and your interest rate net is lower, you both win.
Yeah.
So that's what I'm getting people to understand.
I like that. Do you find that your students and group gravitate to that, or is that a tough education process to get them there?
They all are excited by it, but it takes a couple of times. That's why we're doing a live session where they can just ask 100 questions. I talk about it probably 3 or 4 times a month, deal configuration. And it takes a couple of times. I mean, everybody naturally gets it, but they don't understand the conversation. So what would be some of the conversations? Mr. or Mrs. Seller, I can offer you more money. Mr. or Mrs. Seller, do you like the IRS? Yeah, me neither. Let me show you how you can delay some of your taxes with an installment loan. Do you like income? Yeah, me too. Let me show you how you can, in a secured position, get a little bit of extra money every month, right? These are all part of the conversation that people have to practice. So that's what we do. We help them practice.
Yeah, I love that. Along that line, I mean, what's the framework for that practicing? How are you helping them to get the reps and evaluate how they did or didn't do?
Yeah, so we have a community on school, so shout out Alex Ramosi for putting that on. We have 350 plus folks joining almost every day. It's just the forums are live, but more importantly, I have 6 people in my community that host masterminds and accountability groups. 6 different people, 6 different days of the week where they can join and get that practice. Nice. Also, I go live Sunday morning at 8 a.m. where we typically take on a topic. Like this weekend will be this. Next weekend we're going to have you on. And we just allow people to ask questions. It's very much get in a network with people going in the right direction, ask questions, practice. So, yeah, it's all about community.
Fantastic. Michael, if you could give one piece of advice to folks for this year, what would that be?
I want people to know it's really possible for the average person to get wealthy in America. I have people on every week that started in horrible situations. I have a 9th grade dropout. I have, there's a young lady who was, 18 and had 2 kids by the time she was 18 and she did it. I got somebody who grew up in Section 8 housing. I had somebody that started with a negative net worth of $70,000. It's all possible. That's step one. It's not get rich quick. It's get rich for sure. And real estate investing is a skill, so just be disciplined and learn the skill. Don't cut corners. I actually talk to a lot of people that say, Michael, you don't get it. I'm different. I got $100,000 and I'm ready to rock and roll. I don't care. Until you do the work, you're just going to gamble it. Don't do that. Put that money in a CD and come back in 90 days. So I just want people to know it's possible. It's the greatest country in the world to get wealthy. You're not born into a station and stuck there. You can get wealthy if you do the work. So there you go.
That's a great message. That's an awesome place for us to finish. Michael, how can folks find more information about you, about One Rental at a Time?
Yeah, so I've done very few things in life correctly the first time, but this is one of them. Everything I do is one rental at a time. YouTube, school, books, Instagram. I got that one right. Everything is one rental at a time. It should be easy to find.
Fantastic. Thanks so much for this conversation. If you found value in this, make sure to hit subscribe or share this with a friend or colleague that can also get some value from it. This has been fantastic. Thank you, Michael.
You got it.